Welcome to the Inclusive Finance India Summit 2020. It's my privilege to introduce an inaugural panel of the Inclusive Finance India Summit this year, comprising of an eminent set of panelists. I welcome Mr. Tamal Bandyopadhyay, Consulting Editor of Business Standard and editor of this year's Inclusive Finance India report as well. Joining us from Mumbai, a very warm welcome to Dr. G.R. Tilpala, Chairman of NABARD, who is joining us from NABARD's regional office in Lucknow. Welcome, sir. And it's a privilege to welcome and introduce Mr. Amitabh Kant, Chief Executive Officer, Niti Aayog. Thank you so much for joining us today, sir. Mr. Kant is also joined by Mr. Ajit Pai, Distinguished Expert Economics and Finance at Niti Aayog, and Mr. Vipin Sharma, CEO Access Development Services at the Niti Aayog office in New Delhi. Very warm welcome to all the panelists, and again to all of those who are joining us for the 17th Inclusive Finance India Summit, but the first one that is being organized virtually. As is customary, we'll actually begin with the national anthem and then proceed with the day. I request.
जन गण मन अधिनायक जय हे भारत भाग्य विधाता पंजाब सिंध गुजरात मराठा द्राविड उत्कल बंगा विंध्य हिमाचल यमुना गंगा उच्चल जलधि तरंगा तव शुभ नामे जागे तव शुभ आशीष मांगे गाहे तव जय गाथा जन गण मंगलदायक जय हे भारत भाग्य विधाता जय हे जय हे जय हे जय 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 हे
Well, again, formally, on behalf of Access and Access Assist, it is my privilege to welcome you all at the Inclusive Finance India Summit, being organized with Niti Aayog as the co-host. This is the 2020 summit, actually, which was moved from its original schedule of December last year to January 2021, when the lockdown began, with the expectation that we will organize a physical event as always eventually. However, as the pandemic grew over time, we had to accept the eventuality and then begin planning for a virtual event. Therefore, while it is not the most desirable format, given the current compulsions, here we are, the fully packed plan of 2 days of enriching deliberations and conversations on a diversity of issues and themes related to financial inclusion in India, focusing on India. The pandemic has not left anything untouched. All segments of the economy have been impacted globally and of course also in India. But the most worst affected sector is the poor and the informal sector, as always, when any disaster strikes of this magnitude globally and in India. The government has responded with a series of schemes and stimuli packages, some of which have provided short-term relief, and the impact of the others will be visible as we go along over time. In the meanwhile, there has been a lot of discussion and debate on the need for appropriate safety nets and more comprehensive social protection framework, and the need for putting money in the hands of the poor quickly. The financial inclusion architecture that has been put in place over the past few years, with creation of physical infrastructure, technological and payment infrastructure, the banking correspondent network, and most importantly, the existence of over 400 million PMJDY accounts all across the country. This came in really handy in the time of this crisis. However, the impact of the crisis on the poor and the low-income people and clients, as also on the financial institutions themselves, still needs to be fully understood and, of course, over the period of next couple of years addressed. The overall The overarching theme of this year's summit, quite expectedly, is in the time of the pandemic, navigating uncertainties and building resilience. Deliberations in almost all sessions, by design or by default, will have an overhang of the impact of the pandemic. While some sessions will focus on the hardships faced by the communities during the pandemic and how to work further to resolve and build resilience, other sessions will assess the policy initiatives of the government, as well as the response of the financial institutions to mitigate the crisis that the clients are facing. The summit is designed in a slightly different format this year. In addition to, of course, plenary sessions, the technical sessions are integrated into 5 thematic tracks. 2 of those focus on the original microfinance strands, the SHG model and the MFI model. Other 2 tracks are focused on the 2 very important client segments, distinct client segments, tracks on micro enterprise financing and on agriculture financing. And the 5th track covers wins and misses of digital financial inclusion with focus on client protection and the responsible provision of digital financial services as in future. Deliberations in each track will be led by track anchors that have helped us develop and curate those tracks, and keynote speakers, followed by a set of technical sessions in each track. Plenary sessions will cover overarching policy issues with senior sector and institutional leaders as speakers. We have a much to look forward day to day, with the evening packed with 3 back-to-back fireside chat sessions. First anchored by Shireen Bhan, Managing Editor, CNBC TV 18, with Honorable Minister for Housing and Urban Affairs, Shri Hardeep Puri, and Mr. Ajay Banga, Executive Chairman of MasterCard. Followed by a chat between Dr. Pawan Bakshi of the Gates Foundation and Dr. Leora Clapper of the World Bank Group. And the concluding session in which Kamal will engage Mr. Aditya Puri in a forward-looking conversation on the future of banking in India. I hope that you all will enjoy and absorb these high-octane debates and deliberations, listening to thought leaders, policymakers, practitioners, lined up across the 2 days of these 2 days until actually late evenings. An opportunity presented by this year due to the virtuality is that we could get confirmations from more number of international experts to speak in the summit, as also expect greater number of delegates from outside India. We probably have speakers joining from 5 time zones in the summit this year. Even though the buzz of physical event, busy corridors, people networking, meeting friends in this annual meeting and affair, we have made efforts to make the virtual summit interesting. In addition to hosting the sessions, the virtual summit platform has features and functionalities for networking, exhibitors at the virtual knowledge fair that you can actually virtually talk to, a fintech exposition, the resource center to download various reports and knowledge materials into the delegate briefcase, virtual delegate briefcase. The 16th Inclusive Finance India report will also be released in the inaugural session following just now, which will also be available in the resource center for downloading. We have had an overwhelming response to the summit this year, despite all odds. I would like to thank all partners and sponsors for their continued association for all these years, and particularly in this difficult year for supporting the summit effort. I welcome all speakers and thank them for their time and efforts. I hope that everybody who's already joined and who will join us across these 2 days will enjoy this new format of the summit and find it interesting and enriching. We will move to the first segment of the inaugural, which is the Inclusive Finance India report release. However, before getting into that segment, I would like to take a couple of minutes to remember a legendary figure who passed away last year, Ms. Vijay Lakshmi Das, leaving all of us devastated and shocked at the loss of a visionary who fearlessly and doggedly pursued the mission of women empowerment. She was a voice that among all odds continued to relentlessly remind us of our mission and to think about the impact of actions on the client. Viji has left behind a legacy of multitude of institutions that she created, promoted, or supported, as also scores of individuals she has inspired and influenced and mentored throughout her stellar professional life. We will miss you, Viji. Well, also the final session of the summit, which is tomorrow evening, is dedicated to Viji ma'am, in which we will be joined by Ila Ben along with Mary Allen for the Vijidas commemorative lecture. Now moving to the release of the Inclusive Finance India Report 2020 edition. The Inclusive Finance India State of the Sector Report annually captures the landscape of financial inclusion initiatives, their progress, policy directives, and issues and constraints. While the report mostly uses the data for March 2020, the chapters cover the qualitative aspects of the impact of the pandemic. Obviously, the quantitative data will only be available in the 2021 report. A departure from previous years, this year's report is authored by multiple authors who are experts in various domains in financial inclusion. Professor M.S. Sriram, Dr. R. Bhaskaran, Samir Bali, Alok Prasad, Girija Srinivasan, Hemendra Mathur, Professor H.K. Pradhan, Dr. Pankaj Agarwal, Vedika Bhandarkar and Manoj Gulati, supported by Water.org team, and Indradeep Ghosh, supported by his colleagues at Dwara Research. I thank all the authors for their hard work in putting the report together. The report has been steadfastly supported by our principal partners, Bill and Melinda Gates Foundation, MasterCard, and our long-term partner, NABARD. We are glad to share that our knowledge partner, Rabobank, has also supported the report this year, as also SIDBI has joined as a sponsor this year after a gap of a few years. The report has been edited by Kamal Bandyopadhyay, Consulting Editor, Business Standard, one of the most well-known and respected business and financial journalists in India, and a prolific author, whose latest book, Pandemonium, The Great Indian Banking Tragedy, is making waves. We'll in some time hear from him on the highlights of the report. For that, I request Vipin Sharma, CEO Access Development Services, to kindly present a copy of the Inclusive Finance India report to Srimati Kant for release. I'll also request Tamal and Dr. Chintala to kindly unwrap their copies as well. And we can pose for a virtual picture. We're just waiting for Mr. Chintala, I guess. Done? Well, thank you so much. Thank you everyone for helping us with the release. And may I now request Tamal to kindly share highlights from the Inclusive Finance India Report 2020 on his own behalf and behalf of all the authors that have put together the report.
Yeah, thank you, Radhika. You have actually given a little outline what it contains. This is the Inclusive Finance India Report 2020, 14th edition. And there are 10 authors. All of them are experts in their respective field. And the subjects are as varying as banking, MFI, small finance bank, SHG, bank linkage, MSME, labor, water supply, sanitation, agriculture, fintech, all sorts of things. But the very difference, the key difference between this report and all the previous report is the background, that is COVID pandemic. And this 10 authors, through 10 articles, they all try to actually, they have all looked for an answer to a key question, which all the policymakers and everybody is also looking for. Can we achieve financial inclusion without economic inclusion? What are the ground realities? So let me ask Pooja, who is with you in Delhi, to take us through the presentation. Pooja, can you? So this is the case, as I said, the key question, this report, 10 authors, 10 experts through their articles, thousands and thousands of words, they try to look for an answer. Can we achieve financial inclusion without economic inclusion? And what are the ground realities? Next, Pooja. Yeah, Pooja, next. Yeah, so the second, it starts with what's the policy response to pandemic, you know, and the policy response, it's there detail. I'm not getting into all this, but essentially, all the changing rules for inclusive finance, you know, MSME, look at them, the definition has been changed. The bigger enterprises now come under the umbrella. But the key question is, will it crowd out the smaller ones when it comes to accessing bank credit? Similarly, agriculture, now it's under litigation, but reforms need to be sequenced. That's what the author says. There is also talk about labor reforms and focus on formalization of jobs. But again, the question is, this particular edition is very different from the past editions. It is asked more questions than given the answer because of the fluidity of the situation and because of the unique background. Are we ready for all these reforms? Can market work for poor without creating necessary conditions? Some food for the policymakers. Next, Pooja. Yeah, look at the banking landscape. Now, all bank branches. We are taking a 4-year perspective to the March 2016 and March 2020, from 1,40,000 odd to 1,56,000. Banking outlets in villages, which are branchless mode, run by business correspondents, etc., which Radhika was talking about, from 5.86 lakh to 5.99 lakh. Basic savings bank deposit accounts where you don't need to keep money, 469 million to 600 million. The balance kept from 638 billion to 1.6 trillion. Look at the growth in Kisan credit card from 47 million. It remains the same plateaued kind of thing. Value marginally up from 5.1 trillion to 6.4 trillion. But one thing that we need to look for, and that's what the value this report is creating, the information and communication technology based transactions, where look at this, 87 million has become 8.7 trillion, the number of transactions, 10 times, and value from 17 trillion to 8.7 trillion. So what are the findings? The rise in ICT transaction tell us the story, the unfolding story, the digitalization. The preferred way to cater to customers, not through branches anymore, but the outreach models. Now, BSBDs have significantly risen since the launch of PMJDY in August 2014, with average balance kept in such account rising. And that has come in of great help during the COVID time. The tipping point has been reached. It's time to route more transactions through BSBDs enabled by technology. And finally, the happy signs is the private bank's share in the pie is growing, albeit from a smaller base. So they are coming out of the innovation to cater to this particular segment, the so-called bottom of the pyramid. That's a happy sign. Yeah, Pooja, move on. This I call it the need of the hour. Look at the labor scenario, formal labor and informal labor. This informal, the pie in the informal, the pie in the overall pie of the informal labor, both in terms of number and as a percentage of the overall laborer, is all, you can see that there is not much of change at all. In 2018, only 22.8% of the workers was on regular payroll, less than 1/4. And of the 22.8%, half of them, 49.6%, had no social security. And I repeat, this report raises more questions than answer because of the context. So what we need, some suggestions, comprehensive and universal social security. Second, clarity on the benefits available to workers in unorganized sector, and this is extremely important because of the reforms of in the labor and agriculture segment that the government is talking about. And finally, social security must provide for inflation adjusted income security plus access to health, disability, maternity, sickness, and death benefits. Yeah, Pooja, next. This is a good story among all this not so good, inputs from different segments. We are calling it "Small is Beautiful." You look at the small bank, small finance bank shares. It's March 2020 figure. Since then, it has gone up. Loan outstanding less than 1%, 0.6%. Small finance banks is the newest kid on the block. 10 of them started operations sometime in 2016. Between 2016 and 17. Loan outstanding less than 1%, 0.6%. Number of loan account, it's much higher because they cater to the small borrowers, 5.2%. And deposits again less than 1%, 0.4%. But the things to watch out for, and we should feel happy about it, deposit accounts with less than 2 lakh is 95.6%, and average loan size is 65,945. So this is the segment which the regular high street banks are not very fond of. They are reaching out. So I think it's too early to say it's just about 4 years, but I think the purpose of reaching out and financial inclusion through small finance bank is being achieved. SFBs have market share of less than 1%, but indeed they're emerging as a very, very important instrument for financial inclusion. Yes, Pooja, next. That's probably the most exciting findings from the report. It's the digital drive. Look at the way all of us know that on the payment space, India is the most happening place globally. It's doing far better than all developed markets. Yes, I repeat, all developed markets. And look at the way it's been forging ahead. Retail payments on NPCI platform in 2006 was 6.4 trillion volume. It has gone up 5 times in 4 years, 2020, 30.7 trillion. Value-wise, look at this, 65.3 trillion is doubled 161 trillion. That's NPCI platform, one of the platforms. Now, UPI journey, we have seen that in January, April, and November during the COVID period, how both in volume and value they have gone up. In January, volume was 1.3 billion, which has gone up by November 2.2 billion, and subsequently more. Similarly, value from 2.16 trillion in January gone up to November 3.9 trillion, and subsequently more. But this particular edition of the Inclusive Finance India report catches up to November numbers. And similarly, UPI applications, the Google Pay and Phone Pay and Paytm, we are seeing the exponential growth both in value and volume. So everything is not challenged. We should not feel unhappy about certain things we have not been able to do. The one key game changer which is emerging out in this context is the digitalization of the entire financial sector, which I think recently Nandan Nilekani said, which otherwise would have been done in years, now happening in weeks. Yes, Pooja, next. Coming back to microfinance, which is the key segment of financial inclusion, and that's what we believe. The author, he has given the loan portfolio both in value and loan disbursement, absolute outstanding value, how much it was in 2011, and then gone up by 2020 from 0.24 trillion to 1.02 trillion. Similarly, the new disbursement during the year from 35 trillion to 1.06 trillion. It talks about the top states. As you know, they keep on changing the MFI's exposure to top states. And here we are talking about MFI, not the MFI, that class of lenders, but the microfinance as a concept, small lending. The Tamil Nadu has the 14%, and so the exposure is between banks and NBFCs and others. Tamil Nadu is 14%, West Bengal is 13.7%, and Bihar is 11.4%. These three states are driving it. There are many states which need to catch up. This report also highlights in Assam what's happening, because Assam is in the news. The state law, which has not has become a law in the form of a bill, which will come on the way of progress of the microfinance there. But Assam's overall exposure is much lower, 4.97%, 11,433 crore. But you look at this, the NPAs in Assam, the challenged or the not so good accounts are far higher. 30-day is a technical term. Essentially, the borrowers which have not been able to pay within the 30 days, they are 13.9% for the industry. When I say industry, which is basically the banks and NBFCs put together. But for NBFC MFIs, this is far higher, 21.2%. More than 1/5 of their loan exposure have turned bad, which is very critical. I am highlighting this because there is now, as in the run-up to the elections, both the established, both the current administration and other parties are already started talking about loan waiver, apart from the bill that is coming up. So I would draw attention of the authorities, the policymakers. Mr. Amitabh Kant is here. Do we need to look at loan waiver from a different perspective? So, and what are the key findings? Growing at a healthy pace, but the systemic importance is on the wane of microfinance entities, because banks are getting in there. MFIs are increasingly facing competition from universal bank and small finance bank. And very key findings of the author: time-tested joint liability model of lending is becoming obsolete. Credit cost is rising. And he's also saying the much touted 99% repayment rate no longer is reality. And we have looked at Assam, not 1%, but 22.21% has gone bad. And it's saying that fintech companies can disrupt them even further. So the conclusion is industry needs to evaluate products and services if it wants to remain relevant. I'm sure there are many representatives for the MFI segment. They should know what the author says. They need to reinvent themselves if they want to stay relevant. Yeah, Pooja. Next one. SHG bank linkage, it's entering the third decade, so all of us are proud about it. But the findings are not so happy. It's giving the region-wise share. I don't want to repeat it. It's the author's finding is SHG bank partnership has grown in outreach and volume of finance, but the progress has been uneven, and quality of such group lacks consistency. And most importantly, there is no product innovation. The very similar thing what the previous slide spoke about, quoting the author of the microfinance, the piece on microfinance. The microfinance entities need to reinvent themselves both in products and services. Here also the author says the SHG bank linkage, even though it's almost 3 decades old, but or rather entering into third decade, but there is no product innovation. And question is, how long will the SHG depend only on interest subvention support? So the key takeaway is both the microfinance industry and the SHG bank linkage, the structure, which are two key prongs for financial inclusion in the hinterland and bottom of the pyramid, they need to go back and do some soul searching. Yes, Pooja, we are coming to the end. If you are running out of your patience. Yeah, Pooja, next. Yes, Pooja, next. Yes. So we're coming at pointers to future. What are the key takeaways and how do we look at future? this water supply and sanitation loans, WSS loans now part of the priority loan. So this is getting traction. There's a lot of interest, and this is particularly important because of the COVID pandemic time. Fund flow, this segment is important. Pandemic, as I said. Now, collaboration among multilateral agencies, financial institutions, government bodies, they're taking new forms. Technology is changing agriculture financing. That's a very, very key finding. And the author is suggesting it can capture data on farm stress arising out of climate change, demand supply imbalance, and commodity price crash. And finally, the model which can be built in through use of by using data for the agriculture loans. These models can raise red flags and make cases for farm loan waivers. I am at the risk of repeating myself. I'm going back to I'm drawing your attention, the audience attention, to the previous slide. I mean, two slides back, we spoke about what's happening in Assam. More than 20% have turned bad, and on top of that, there has been farm loan waiver talks, etc. And here we are talking about, the author is talking about, we can use technology, we can use database models and to raise red flags and make cases for farm loan waiver. So don't go for blanket waiver, go for selectively, where for the needy, and don't go for everybody else. For everybody, it will harm the cause. Yes, the last one. Yeah, Pooja. So what are the key lessons, what are the key takeaways, and what are the 10 articles talk and because again, as I repeat, the background is very different. Never waste a crisis, which we are not wasting. Both the government, the policymakers, and the financial institutions, they are all finding ways how to make the most of it. This is the moment to forge ahead. COVID has sent digitalization from years to weeks. And finally, we must see the same speed in other segments of inclusion. The way digitalization is forging ahead, very similar speed, the rap speed that we call it, for labor reforms, for agriculture reforms, for everything else, we need that. I think that brings to the end of it. Thank you for your patience. It's a wonderful, all the authors, they are the experts in their segment. And I must say that it's a wonderful collection, both for policymakers as well as the institutions and students of finance. Thank you. Very good morning for everybody. Over to you, Radhika.
Yes, thank you so much, Tamal, for bringing together 10 chapters and actually 11 into a succinct presentation. And I think it also helps us set the tone of the 2 days conference sessions, because a lot of these things will be discussed in the summit sessions as well. So now it's time for us to hear views and insights from our esteemed speakers of the inaugural panel today. May I request Dr. G.R. Chantala, Chairman NABARD, to kindly address the virtual gathering, please.
Thank you, Radhika. Respected Amitabh Kantji, Vipin, Tamal, Radhika, and others who joined virtually this conference. And it's very timely. First of all, this report, as Tamal was telling, that this is a little departure from the previous years. I'm an ardent fan of this report, and every year I used to attend this thing as a CGM also. And earlier that it used to be written by one author, and this time that many others have given their perspective as what was presented by Tamal. Now I will go through the report in detail and will take maybe a sense of it. But in the meantime, I am extremely happy for that last slide which Tamal had put, that is, never waste a crisis and the moment to forge ahead. That this what I think it proved to be a good thing, as NABARD had done the thing in such a great kind of a thing during this pandemic, that I will just try to share as to really how we have come out of this crisis of the pandemic. Everyone is aware that pandemic had created enormous crisis for not only India but the entire world, and the poor are the worst affected. That is the one which is the included population which we are all talking about. But we did not take that one as a kind of a setback. So we started looking into as to really how we can do things better during this crisis period. So now, before going into really how we have pulled out of this crisis, and now we are going to post close to 20% growth, not only in the NABARD's balance sheet, but also in the loans to the financial inclusion segment and also the wash sector. Probably that is the one which were created during this crisis, we convert into an opportunity. So first of all, I would like to say really what is the inclusion. Now, inclusion was happening for quite some time. It started in 70s, and at the same time after RRBs came, that is also a kind of effort to include the rural population. Then came the SHG bank linkage, then the microfinance, then came the definition of financial inclusion. Till that time, we were all operating in the same sphere without the definition, but at the same time, this definition had just made a kind of a twist. Earlier, we were all talking about, when I joined the bank, say that now that how the excluded people should be brought into the fold. But thing is, now they say that excluded population is not an issue. That is now the how to include everyone to make them as a partners in the progress of this economy. So in that process, this new definition of financial inclusion, where the basic services for the credit, deposit, and also the insurance will be ensured to every citizen, is the one which was a game changer in my opinion. And I am extremely happy that NABARD is the partner in the entire journey in the last maybe 50 years. Though NABARD is now just entering the 40th year, but ever since this entire thing had happened, we are there in this one. So now NABARD had got into this entire financial inclusion setup with the starting of a startup finance, which we gave 10 lakh rupees in 1987 to Myrada, to just experiment really how the SHGs function, because that time nobody was even aware really what is SHG and how the repayments will come at the 99.9%, and what is the group effect and how the group synergies work and all those things. So when we experimented with that 10 lakhs, maybe in the today's parlance, it may be close to around maybe around 5 crores or 10 crores kind of a money, but this 10 lakhs startup, if I really look into it as a SHG financing, we started, today is close to around 1.08 lakh crore enterprise in the country. And when I was looking into some of the figures which I collected, from 2000 to 2020, close to 20 trillion rupees have been given to the poor people without any kind of a collateral security. And most of them have risen from their poverty levels and started making life a little better than what they were living. So now, in that way, the greatest experiment, that is self-help group, as Tamal was telling in that one, then now it is entered the third decade. And now in the third decade also, it is still relevant. But at the same time, I do agree that really we need to reinvent that product and make some kind of a changes in this one. And the other one is with regard to really how to make digitalize that entire SHG movement, and also create a kind of a product which is going to make the people to work on it. So now I spoke to many of the people as to really, in case if you want to make this SHG women who are there with this movement for the past maybe 1 decade, 2 decades, or even 3 decades, really can we make them into kind of a micro entrepreneur? So that is where everywhere we are taking and we are telling and we are trying to devise the products that that each micro entrepreneur, this lady, should be given minimum 50,000 rupees as against the national average of right now 19 to 20,000 rupees, which we are giving through the group approach. And again, the spectrum varies in such a way that some of the good states like South Indian states, where almost 80% of that or maybe 75% of that SHG loaning is happening, the averages are better. But thing is, where it is required, particularly for the excluded population of UP, Bihar, Jharkhand, Chhattisgarh, Rajasthan, and to some extent Orissa, Northeast, and all those things, the averages are pretty low. I think they are getting not more than 5,000 to 6,000 rupees per member. And I don't think that there is any enterprise which can be started with that 5,000 or 6,000 rupees to pull them out of the poverty line. So that is why now, since the policymakers, Niti Aayog is sitting here, my submission to the policymakers is that now let us rise it. Though the Reserve Bank of India was kind enough to increase the limit from 50,000 to 1.2 lakh crores, but 2 lakh rupees per member, but we have to do something to just make it little higher, and also a kind of a caveat for the bankers also as to really how they should give the money more. So then when I am looking into the other part, that is how this FI is taking a curious turns, because from PSL to RRBs to the SHGs to the MFIs, now that microfinance institutions, which came somewhere in 97, it started originally as a kind of a social enterprise or a kind of an enterprise with a kind of a service motto. Over a period of time, ever since that MFIs have turned them into a kind of a commercial enterprises. When the first MFI has gone into the maybe some kind of a issues, public issue kind of a thing, suddenly the investors' interest has gone up so much and they started extracting the pound of flesh. Even today, despite the MFIs doing maybe 77,000 crores or 80,000 crores of a business every year, but still the customers are paying a very high amount of interest. So now the time has come. Why? When I was looking into how that pandemic had created a kind of a new ecosystem, that is the digitizing the entire thing, or the digitalization. Now that if I look into the cost of the entire MFI financing, they say that the borrowing cost is X, and on which that will load maybe around 10 to 12% as the cost of management. Of this cost of management, maximum amount goes to the foot soldiers who are there at the ground level, apart from the back office staff. Now today, when the digitization happened to such a level, I think, and the artificial intelligence and the machine learning has come in a big way. Now most of the back office can be substituted by this kind of a cost-effective new inventions, and the foot soldiers can be made into more productive because of that. A lot of data can be just sourced from the cloud itself. Now they can attend to more number of clients, and at the same time the cost can be reduced. So now that is why my entire interest is this pandemic has created one opportunity, that in the days to come or years to come, the MFI loans, maybe the interest cost should come down to not to somewhere around 18%, not beyond that, because 26% is unaffordable for any kind of a client, and the poor are the most vulnerable. So now this is one takeaway I will say that the pandemic had created, and we all have to work towards it, all the institutions put together. Then the other one is with regard to how NABARD had done during this pandemic. Now, generally, pandemic, everybody thought that first quarter was a washout, and subsequently there was a muted response, and subsequently now the things are started looking up. But we never rested. Now, from the day one, NABARD was never closed for operations even for a day. And now today, I will say with a great kind of a pride that during this particular crisis period, we have distributed close to 2 lakh crores of rupees during this period. And now from 5.32 lakh crores of balance sheet, even after netting out our repayments during this year, today we are almost close to reaching 6 lakh crores, and by March we are going to reach 6.5 lakh crores. Now here, one very good thing which I would like to tell is about the financial inclusion interventions in this entire balance sheet amount. Now during this crisis period between April to maybe December, close to around 4.53 lakh SHGs have been given the loan assistance by the mainstream bank, and most of them have taken the refinance from NABARD. And this amount that was given by the banking system during this period is around 27,295 crores. So now that itself, I can say, is a remarkable thing, and maybe I can say the confidence shown by the government of India on the banking system, they have never belied it. They have done it. The other major thing that had happened during this year, this pandemic period, is that joint liability groups, though actually that Tamal was, I don't know whether it is charitable or uncharitable, he said that joint liability groups are outlived their utility. But thing is, I feel that in the case of the context of the poor, there is no other mechanism other than joint liability groups. You can make the digitization of joint liability groups, you can make them more accountable, you can do anything. But at the same time, the poor cannot be given loans on standalone basis just like that. So if that is the case, there should be kind of a peer pressure pressure, and Assam is not a barometer for us to just conclude. So now I'll say that now Assam crisis, again one more thing, it may be the political expediency, but at the same time earlier there were waivers of the loans for the farm loans only, but now that Assam has created a new chapter of waiving the loans of microfinance, which had never happened in the Indian banking history. Now hope that this will not become a kind of a contagion and other states also emulate. Then if that is the case, this fledgling industry is going to have a big kind of a chaos, and the people who started to help these poor people probably may be out of this arena in the years to come in case if this kind of a contagion spreads to the entire country. So now the policy makers have to convince that Assam government to not to push ahead with such kind of a things, because I am not saying that they are draconian, but at the same time they are the ones going to kill the initiative of this kind of ventures. So now here I'll say in case of joint liability groups that now during the crisis period, close to around 8.28 lakh joint liability groups have been financed to an extent of 11,701 crores. This is over and above that 1 lakh crore groups, 1 crore groups already, which are having with 1.66 lakh crores of a loan. And also other thing is that now many of the mainstream banks have started signing MOUs to finance the joint liability groups. Now, as we understand, and also this is our experience, now many a times now if you look into the microfinance or this maybe inclusive finance that is going on, commercial banks, both the private sector, public sector, basically public sector, RRBs, and private banks also, are coming in a very big kind of a amounts with this financing of this microfinance and the inclusive finance, which was not happening earlier. So now if I look into really what we have done during this crisis period, now already during this crisis period, NABARD had given close to around 15,000 crores to the NBFCs and MFIs, which are doing this kind of an inclusive finance. And also to most of the private sector commercial banks, whether it is IDFC Bank, IndusInd Bank, RBL Bank, or even the ICICI and others, most of the portfolio which they are coming for refinance to NABARD basically belongs to this either this microfinance, inclusive finance, MSME lending, which basically forms part of this inclusive finance. Now, we are already reached in our long-term finance close to around 60,000 crores. We are going to reach maybe shortly in another 5-6 days. And there is a tremendous amount of interest among the people to push money into this sector. So now, I am absolutely upbeat during this period that India is pulling out of the crisis and the small people started making their lives maybe again humming with some kind of activity, and the money flow is happening. And at the same time, we have done some more things with regard to this reverse migration and also creating the livelihoods to the people. Now, reverse migration crisis, everybody started addressing it in some form or other. But what we found was that now that reverse migration and re-reverse migration, both the things are happening. So now, the people who have gone from urban areas to rural areas, they have a better skill sets than the people who are residing only in the rural areas. So now, we have created maybe in UP, Jharkhand and Bihar, we gave some project with around 10 crores to train close to around 30,000 or 40,000 people to see that they will get an up-to-date kind of a training so that they can start their own enterprises. So now, this reverse migrant issues should be addressed in a totally different context, and depending on their skill sets which they acquired in the urban areas, these people should be given the appropriate training so that they can start. And at the same time, we want to link these people who are getting this training to the banking sector so that they will get the loans also to start their own enterprises. And the further is with regard to that livelihood and enterprise development program, which NABARD started 5 years back, had come so handy, and now we are able to almost scale it up to 1,000 LEDPs, where almost close to around 1 lakh people have got not only very specific training, and they started their enterprises also. Then the other thing which I would like to look into this financial inclusion is with regard to that maybe creating an enabling ecosystem. Now that is the major part. When everybody is talking about this crisis had helped a lot in digitization, but many have, I think, not noticed really what kind of a background work has been done in the past maybe 5-6 years by various institutions and the government of India, Reserve Bank of India, NABARD, and for all others. We have done quite a lot of a spade work under the financial inclusion by creating an ecosystem through the Financial Inclusion Fund. So far, in the last maybe 5-6 years, NABARD could spend almost close to $500 million to create the supply side as well as the demand side ecosystem. Now, in case of supply side, I will say that now we have promoted the CBS for all the cooperatives. That's why even the DBT transfers were not happening through are happening through cooperatives and also the regional rural banks. And also we gave quite a lot of POS machines, ATMs, mobile vans, and also that MPOS machines and eKYC norms to the banks, and maybe enabling structures to this kind of thing, so that the rural financial institutions, RFIs, are also able to take part in this entire pandemic-driven digitization process and also the transfer of DBT directly to them. So now we are extremely happy with the way that Financial Inclusion Fund has been put to use and created the ecosystem which came in handy during this pandemic period. The other thing which was very good about this one is with regard to creating the demand side kind of an issues, that is addressing their financial literacy. So all banks, including Reserve Bank, are the part of this financial inclusion literacy campaigns, and quite a lot of things have happened. That is why even the rural area people or the people in the poorest of the poor strata also are able to operate in the financial inclusion in the digitization process. So this is also one very good development that had happened. And the other during this crisis period, one more new development, that is that with regard to that, Tamal has shown that NCPA, UPA, and others, the transactions have gone into multifolds, into trillions. Now realizing the importance of this kind of transactions and the need to have a kind of a competition, Reserve Bank of India has come out with an advertisement for floating a new umbrella entity. And yesterday we had some presentation from some interested party. Then he was telling that now, today we are talking about maybe something like maybe 2 billion transactions in a month. But they say that maybe in the days to come, that is by 2025, the projection is close to 5 billion transactions a day are going to be the reality. If that is the case, a new architecture has to come, and already the system, the things are in progress. So now this is going to make India a really digitized economy where the cash transactions will be less, corruption will be less, and the transaction will be seamless. So now NABARD is part of this entire thing, and we are also talking to various players as to really how this NUE can be set up. So now we are also looking into it. Then just coming to the last, that I will say that what is the way forward. Now self-help groups are able to deliver quite a lot of benefits to the people, but at the same time, if you look into the statistics, maybe the states where there is a state patronage is abundant, the self-help groups have done very well. If you just look into any of the statistics which we publish also, 60-70% of the transactions happen in the southern states, because two major states, Andhra Pradesh and Telangana, gives the 0% interest. That is why, if you look into the analysis which we do in the microfinance report, we will say that maybe Andhra Bank, Andhra Pradesh Gramin Vikas Bank, Saptagiri Gramina Bank, maybe Indian Bank, all these banks have performed exceptionally well in SHGs because they operate in those areas. Now next year report probably you will find that Union Bank had outperformed the entire country with regard to the SHG lending, because that Andhra Bank has been subsumed into the Union Bank of India, and that is going to happen. But at the same time, really, whether the subvention has to continue forever, how burdensome it is to the state, that is up to the state governments to decide. But at the same time, that it is creating a kind of a curious kind of an observation that the inclusion which is required more, that is Uttar Pradesh, this entire North Indian belt, earlier Bimaru states. These are the places where the state patronage is still lacking, and there is not much of a headway is happening, either in case of maybe the SHG lending, or even in case of the MFI lending. So now that is where the policy planners, all of us also, we have created a kind of a niche kind of a projects where we can push this kind of a thing in these states, but still it's work in progress and nothing much is happening in this one. Even with regard to this MSMEs and LEDPs, that we are pushing quite a lot, but at the same time, those states which are well endowed with infrastructure and also getting benefits, it's the way they are getting in the SHG or JLG. These are the states again getting the lion's share of this MSME lending and also the LEDP lending. So now again these states, Bimaru states, where the maximum overhang of poor is there, that they are still yet to get such kind of a benefit. So now that also we will see. So finally, I'll say that there is a wash sector that now. Wash is the one which is really creating a kind of, it has become a necessity during this pandemic period. And earlier, many people are working on it, but thing is, we have created a new product on Gandhi Jayanti Day, where we are giving a exceptionally concessional refinance to this thing. And already now, many of the mainstream private banks are going to avail close to some 300 to 400 crores each under this wash sector. Many of the MFIs and NBFCs working in the wash are also going to take the benefit. And we started in the wash literacy campaign. We are and India as a whole is going to get the benefit, and in the days to come or years to come, everybody may write maybe songs about really how India could pull out of it. So finally, I will say that Atmanirbhar Bharat will happen only with the Atmanirbhar Poor or the included population. So that is where with a great hope, I wish that maybe 2021 is going to be a great year, but also for the inclusive kind of an operations which you are all embarking upon. Thank you all.
Thank you so much. To bring a lot of positivity through the 2 days. Finally, without further ado, it's time to hear from our inaugural chief guest, Shri Amitabh Kant, CEO, Niti Aayog. I request Mr. Kant to kindly begin his address.
So Dr. Chintale, the chairman NABARD, Mr. Tamal Bandopadhyay, who's written a wonderful book on Indian banking, Sharma, Mr. Ajit Pai, distinguished guests, ladies and gentlemen. It gives me immense pleasure to welcome all of you to this Inclusive Finance India Summit of 2021. Since 2004, the summit has endeavored to bring policymakers, practitioners, bankers, researchers, academicians, and civil society together from within and outside India to help develop a vision for a truly inclusive India through dialogue, deliberations, and debate, and influencing and informing the factors that advance or impede products is instrumental in bringing individuals out of poverty traps and penetration of financial inclusion. Financial products can enable increased prosperity through savings and investments, greater security and resilience to income or health shocks through insurance, and new aspirations through credit for business or learning opportunity. to ensure universality of access to banking services. Uh, as I speak, nearly 42 crore beneficiaries are banked so far, and a total of Indian rupee 135 crore balance is currently in PMJDY accounts. Powered by India Stack and the JAM Trinity, Jandan is truly brought to universal access and and India made the leap beyond financial inclusion into financial integration via UPI, India's biggest payment success story, which is being adopted by many nations to enable real-time payment and secure payments through bank accounts of an individual. With provisions like zero balance bank accounts and mobile banking on feature phones, Jandhan provides access to a bouquet of services ranging from pensions and pension schemes. The direct benefit transfer reforms powered by UPI's backbone brought in the next phase of inclusion, which in fact proved to be truly instrumental during the pandemic. DBT enabled the central government to disburse about Indian rupee 31,000 crore as financial assistance to more than 33.25 crore people. Within a couple of weeks of early lockdown, ensuring exposure of beneficiaries to public places was minimized. Similarly, video KYC enabled contactless finance for account opening purposes. And this was a remarkable breakthrough. India's lower income groups access to appropriately sized, priced and timed financial products has been increasing at a great scale. Schemes like the Mudra and PSB loan in 59 minutes have been a boon for small businesses to get access to working capital loans. Pre-COVID-19, 92% of small businesses in India lacked access to formal credit. These were primarily due to the traditional credit underwriting parameters used by financial institutions for sanctioning credit. Niti Aayog is working towards a mechanism for using existing DBT infrastructure to disburse loans to account holders through Project Kashi. Project Kashi is essentially a kind of receivable financing scheme against DBT transfers. Simply put, it would allow crores of Indians to borrow against DBT payments due to them with loans disbursed through this existing network. Indians have been rapidly accessing and adopting digital services over the last decade across platforms such as Aadhaar, offering unique digital identification and the unified payments interface, as well as through increasing mobile connectivity, tele-density and internet usage. Members of the lower socioeconomic strata are for the first time becoming data wealthy, even before becoming economically wealthier. Small shop farms, farmers, traders, MSME entrepreneurs, rural self-help groups, and gig economy workers are increasingly generating a digital transaction history that could be used to inform and build trust with financial bouquet of that creates a Cambrian explosion of novel products and services that empower people. Breaking data silos and monopolies will allow indigenous fintech digital financial inclusion, the 3A's framework will help advance the country's vision. Adequacy, and that is adequacy of availability of financial services to all sections of the society through the formal financial system, covering savings, credit, remittance, insurance, etc., coupled with the above indicators, can bring in absolute financial inclusion in India. And advocacy. To achieve that, we need to respect that the customer might not understand the product or have the financial literacy to use it, and be ready to help them with education. These objectives are not unrealistic. They are critical to the success of any digital experience, and in fact much easier to achieve than with hands-on interactions. With digital products, we have benefit of measurement and predictability, enabling us to be fair, transparent, and to deliver a consistent and rewarding experience. With Government of India propelling fintech innovation via regulator sandboxes set up by RBI, SEBI, PFRDA, and ADI, there is growing emphasis on outcome-oriented advocacy by the government. To truly realize Make in India and self-reliance, fintech innovators should grab this opportunity and make best use of favorable innovation reforms. I'm sure this summit will give an opportunity to key stakeholders to I would like to thank all of you, particularly Chairman Dr. Chintale and Mr. Tamal Bandyopadhyay and Mr. Vipin Sharma for this path-breaking initiatives, and we look forward